Welcome back to the 100 Share YieldMax Challenge. In this series, we've been following the YieldMax ETFs from Group A, B, C, and D, and a few of the weeklies from various companies. We started with 100 shares back in December of 2024, and this week we have just received our payment from Group A, so this will be our fourth payment. And before I get into this, could you guys do me a huge favor and go ahead and let that mouse drop down and hit that like and subscribe buttons? That really would help me out on this channel. Appreciate it. It's free to you, but it does mean a lot to me. And as you're watching this, what is your favorite ETF fund? It doesn't have to be a YieldMax or even a dividend stock. So just go ahead and drop that in the comments to let myself and the others in this group figure it out. Okay, so let's get going. We have Group A. We have a negative 55 total yield on the portfolio. As you can see, the market value is down to 18,253. Here's our breakdown. Feet and 5e, those are the new ones, so they don't have 4 full payments. I'll show you those in a bit. That's why they're a little bigger. They still have a higher initial value. But here is the breakdown. We have one winner this week, or for the month, Crash, CRSH, which is the Tesla short. As you know, Tesla's been getting hammered the last few weeks. Won't go into why, we all know that. But this has been doing really good. As you can see, we're up to 121.18 shares. The average purchase price is $6.93 with a current price of $7.37. So this one's doing real good. As you can see, here's its chart from starting in January. This is when we were doing okay in the market, and like I said, this is a short, so it's going to be the opposite of the market, which is why it's gone up for the last 3 months. The dividend payment, 65 cents, 111% yield. Like I said, this is the short. We're doing good this last 2 months, as you can see. We got a whopping 64.58 versus 381, 286, 3708. And see, we were getting back in October. We haven't had returns since back in October like we did this month. So this is pretty good. We might get another month of that if current trends continue. We'll hop over here. As you can see, we're up to 121 shares. We are at a 37 cent because it started at 7. We're up to 37 cents over our start price. And the investment's up 193.10. We're at a 29% return with DRIP on our initial investment. And we are up to 24% if you didn't do DRIP. So if you just bought the 100 shares and put the dividends every month in your pocket, you would have got 37, 28, 38, and this month 64.58. You would have received $168, and on this one you'd still have your initial $700, so you'd be okay on this one. But this is the only one in the green, so let's go and check out the next feet. As you can see, it's in the red. This is the one that started at 50 and it's been dropping. That's down to 35 ballpark. It paid a 69-cent dividend. That's only 17%, so that one's not very good. Because you can see it started at 219, 196, and down to 69. So that one is not doing well. If we go over to here, you can see it's already lost $1,000. And this only has a couple of payments in here. Like I said, this one started late. But still, it seems to be the norm. They start at $50, and then a lot of them lose a lot of value in a hurry. So be careful with the new ones. FIVY, same thing. The pretty severe drop off. It's down to 71, 17% yield, and same problem. 160, 110, 112, and down to 70. GUI, so that's the Google. We're up to 112.42 shares. Our average price is $14.60. Current price is $12.15. We're a couple $100 down overall. As you can see, this one has been going down with the market. 33-cent dividend. It's still a 38% yield, so that's okay. As you can see, that's also normal for the last few months. Well, you had a 60, so you had one good month. December, sometimes they have to do what's called, they have to pay out their holdings because they're required to pay out so much a year. So sometimes you'll have these big dividends at the end of the year. That's because they have to balance their books. OARK. That's Snowy. Wrong button. Orc. As you can tell, I don't do edits to cover up my mistakes. This one was doing good up until the last couple of months, and then it dropped off. Our dividends, 32 cents. You could also look at it in, you're making $1.51 a day on that, $10.60 a week, $45.92. These are averages. And quarterly 137. You're looking at 43% on the yield, and the yield's gone up a tick up. So we had 40, 30, 30, 40, 30. So this one's in the range, so that one's more of a steady. Okay, now we get Snowy. We're at 118.37. The average price is $20.66, and it is down to $16.21. That's down 500 on this. And like all of them, they've been following the market down. Our dividend was 81 cents, 47% yield. And as you can see, 81 cents is not bad. We had a 50, a 70, a 90, and an 80. So the last four have been pretty good. And Tesla, oof. We do have 127.54 shares. Unfortunately, our average cost is $14.91, and it's dropped to $8.07. And we all know why. This is what's going on in the world. As you can see, it wasn't as steep as the others, but it's been steady because it dropped earlier because of the political crap. 46-cent dividend, still a 72% yield. And as you can see, we were up in the dollar range, and then 70, 50, 40. So it's not dropped off its dividend payment as bad as you might think with the punishment the stock's been going through. TSM option, TSMY, we're at 115.49, 1979 average share, and 1544. And this one's down about 500 also. Yep, following the trend. I think they're all about the same on that. Dividend of 58 cents on a 35% yield. So 80, 60, 60, 57. So it's hanging on. It only lost a little over 2 cents from last month. So good. XOMO 108.13, 15.46 cost, and it's at 14.48. So that one's close. It's only $106 off. You can see its price has been a little more up than just a steady decline. So that's a positive for this one. The 30-cent dividend is only a 20% yield, but it seems to be steady. 24, 34, 25, 29. We're 4 cents above last month, so that's good. And last but not least, YBIT, we're up to 122.87 shares. So our shares are growing quickly. We got 1369 average on a 982 current price. We are down 475 total. You can see it was up to over $13 a share, and now it's, under 10. We got that dividend payment of 44 cents, which is a 38% yield. And we had 40, 50, 70, $70, $20. So this one has gone down. It was 11 cents last month, 24. So it's been ticking down on the yield also. Let's take a look at these real quick. You can see 112 shares. We have lost 59.16 as our total loss. We're at a 10.89% return for GUI. ORC, 167 loss. So you can see the dividends, $35. We're at 13.36 return with drip, 12.61 without. And this one's been more of a steady payer. So if you're looking for that steady monthly dividend, look at that, 33, 33, 43, 32. Not a lot, but steady. Depends what you need. Snowy, down $200, 118 shares. These prices are the price at Declaration Day, or would it be this weekend? So these are your current price. Your dividend, 81 cents, so we're getting $91. This one pays a little better, 50, 73, 92, 81. So this one would get you more per month. It's a higher price investment to start with. We're at 16% return on house money. And of course, for those of you who haven't been here before, house money is how much of your initial investment you've gotten returned. This is drip, so we're reinvesting it, so that's why it's a little higher. This is if you don't reinvest it and you just put it cash in your pocket. Tesla, 543 down, but we are up to 127.54 shares. So remember, if you're looking long term, getting these big boost in share number, because all things will settle down and people will go back to Tesla because they're awesome EVs, you will see this price start to recover, and then you're going to recover faster because of your more shares. So if you're holding it, I'm okay with holding it. I have a few shares, not a lot, but I was thinking of going more, but I want to wait and see what happens. We are at 20% return already in 4 months, so that's not bad. And 19 on without drip. TSMY, we're down 306. We're down to 1783. As you can see, 115.49 shares. Your 57.72 dividend. On the dividend tracker, it's showing 2-place decimal. This is the actual numbers, so it's being rounded for you in there. 13% and 12. XO, as you can see, like I told you, this one was hanging in there. Look at that. We are, even though we have a negative share price because the number of shares has gone up and it's close, we are actually positive as far as actual value goes. So that's That one's doing good. Like I said, it's been paying 20, 30, 25, 29, so a steady Eddie. And it's only 7.67, so it's a lower return, but then again, it's also profitable and stable. So those are good, two good factors. YBIT is up to 122.87 shares, but we have lost $208. So as you can see, we've had a massive 433 in share price. Our dividends are going down, and this one's 70, 70, 50, 40. So this is, this isn't one that would be good for your monthly paying bills when it's going down that fast. Of course, we have returned 18% of our initial investment already. So feet, like I said, these are only a couple numbers in, so we're only at 106 shares. But this one, like I said, these $50 ones that dropped down to 35, we've lost $13 a share. So we've lost over $1,000 and only returned 5. And then this one was just the one payment, and it's only 1.46%. So those two we will catch up as they go. If you wondered where we started, here's our 100 shares. Here's our initial start price of all of them. So we had $21,959 initial investment, which is actually higher than our market value. And then our cost is $23. We did make $140 on Friday, though. So that's Group A is payment. Next week we get to see Group B. And what will happen with Group B? We have two winners. We have Babo, which is up $349 currently. GDXY is up 191. Who's really a CVNY? That one's, that's the $50 one, and its price has dropped to 34. We have had no payments. Let's see. This one dips is only 16. It's got a week, so if it just goes up a little, that one will turn green. Meta's close to 20, so we need $2 a share, so that'll probably be tough. JPMO is 156. MARA. Ooh, that one hurts. As you can see, it's 39.67 down to 23, so that's why they're 1900. 193 down, 174 down. And PLTR, Platey. 120 shares. This one had a good jump because this is when Palantir went way up. That stock went all the way up to 90, and now it's way down to 66. So that would have been a good one to just buy and sell the stock on. And weeklies, the weeklies have not been doing well. As you can tell, all of them are in the red overall. We don't have any huge gains in shares. As you can see, some of these are higher cost, and when they get the smaller dividends, the share increase will be less. But they're unfortunately all losing money. So we will have to see what happens when the markets turn, as they always do. So that is it. Quick peek at C. One winner in C, two winners. Oh, that's a short. So, of course, and that's a low 871. Look at that, 125 shares. So that one's good. And CVNY is doing good. And these are all $200 to $500 range. So they have 2 weeks to recover. Group D, which paid last week. As you can see, the short is already up $26, and so 700, 800, 200, 383. So they are all still down, but that's okay. They've got time. Like I said, we've got 3 weeks on those. So that is it for this week's video. Once again, if you haven't done so yet, please hit that like and subscribe. Appreciate you hanging out today, and we will see you on Declaration Day. Have a good weekend.